Hello traders, in this video we are going to be looking at the broadening wedge pattern. So basically this is a pattern that uses support and resistance levels to identify areas of price consolidation, which you're then going to look to trade a breakout of. As you can see, I've already marked two broadening wedge patterns on this chart here. This is a 1 hour pound dollar chart. So in an uptrend, what you're going to do is mark significant level of resistance, for example here, and then the level of support, and it should be done in a way so that it looks like a wedge, hence the name, the broadening wedge pattern. As you can see, this is a wedge shape here that's got broader as price was moving upwards here. You can see the uptrend. Okay, so what we had was a little pullback here after price met resistance. However, we were still considering this as a longer term uptrend, so we're just going to wait for the price to pull back, form a new level of support that creates this wedge pattern. And once that's done and price would have been around here, you would have seen the wedge pattern had formed, and you'd be looking to enter on a breakout of the resistance level here. Okay, now you wouldn't necessarily take the trade as soon as price breaks out from the resistance level. You could always wait for confirmation with a candle closing, perhaps a particular candlestick pattern to time your entry, or other indicators for confirmation. For example, we have if I just zoom in there, we have a spinning top here and here, okay, which suggested that perhaps the market was going to continue moving upwards. Have an inside bar. Yeah, and most importantly, the resistance level here being breached is the main confirmation that we're looking for to take this trade and get in on this uptrend. You see started around here. Okay, I mean, the broadening wedge pattern is good, especially on the higher chart time frames. I find this more reliable. However, you could just use the resistance level here. Would have been a good enough area to look for entries into this particular trade. Some of you may have even wanted to take it on the pullback around here to try and get in earlier. The thing about doing that is, more often than not, price may continue going against you and you'll get stopped out. But for argument's sake, let's say we're just focusing on the broadening wedge. This is an ascending broadening wedge pattern. Let's just say, for argument's sake, we're focusing on this, and we enter on the breakout. We can have a stop loss just below the other side of the resistance level, or below the swing low here, so around 15 pips, which is a reasonably tight stop loss for the 1 hour chart time frame, especially when you consider how far price moved up from here. Let's just check. I mean, 400 pips in a couple of weeks. That would have been a nice trade that you could have saved yourself lots of hassle from trying to scalp or trade all day long. Just get yourself in a nice long-term position like this one and lock in your profits as earliest opportunity. For example, when price continued upwards, you could have moved your stop loss from this area here on the breakout up here, you may have moved your stop loss there just to lock in the trade to make sure that you got some profit if price did turn around. Others may want to just move the stop loss from here to break even around here just to make sure that they're protected in the worst case scenario if price just turned around from here. But yeah, so that's one. That would have been one entry on this uptrend using in the broadening wedge pattern, and I've marked another one here. Again, same principle. Resistance, support, price consolidation. Look to trade the breakout. Price could be below the swing low. Again, around 15 pips. If you want, you can even put it on the other side of the support level for more breathing room. And this is another good trade that would have had a good risk to reward ratio when you consider price still moved up 230 odd pips with a relatively tight stop loss. I mean, even if it doesn't work out a few times and you take a few losses, around 10 to 15 pips, when you do land one of these trades, they can catch big trends, as you can see from this example. Ideally, you want to get in as early as possible, but there's ample opportunities throughout to enter this trend. It's quite a strong trend, as you can see. You can enter on the pullback to support this support line as well, which is, as I said, you don't necessarily just need to use the wedge pattern on its own. You can use other price action analysis, candlestick patterns, and even indicators. For example, if we just put the ADX on the chart, let's just remove this line. It's basically the ADX. You can look to enter when the green crosses the red and the momentum is above 20. That's this main line here. It's basically when the green crosses the red, it suggests the market's moving upwards. So if we just mark off where the ADX crossed here. Okay, anywhere after there, you could have been looking to take a long trade. Crossover here could have been a good entry point as well using the ADX. Again, you had a nice breakout of that resistance level there as well. So there's many ways you can enter onto a trend. The most important thing is first identifying the trend and then deciding what analysis you'll use to time your entry, and obviously have good money management. This trade is interesting because on the breakout, the ADX also crossed. It was still having some momentum above the 20 level here, which would have been good confirmation. This big inside, this inside bar here by this big bull candle. Okay. So that's an example of two broadening wedge patterns in an uptrend. Now we're going to take a look at, I've already marked off here, somewhere, not that way, this way, in a downtrend here. So again, clear trend downwards. Okay. And then this is where the price formed support level. So we mark the support, mark the resistance. So resistance, support is showing our wedge here. Okay. And we're going to look for breakout in the direction of the trend. Breakout happens around here. Okay, so the support turns to resistance, and this could have been an entry point we did have quite a significant pullback here. However, had we used the, let me just move this one. We could have used this resistance level as a stop loss area, and we still would have been okay in that trade. Alternatively, you may have waited for price to show some consolidation and signs of reversal here and either exited the trade for profit or just locked in at break even, so you would have been taken out around here, but at least you wouldn't have been in a loss. It's just to emphasize the importance of good money management. Try not to let winning trades turn into losing ones. Lock the trade in at break even close part of the position and let the rest run. Just depends on your own personal preferences. There'll be instances where you will get taken out of a trade and price will continue against you, so it would have been a good decision, and there'll be times where you get taken out of a trade early and the price will continue downwards. For example, if we were taken out here, you can see the price did continue downwards afterwards. Okay, it's not 100% every time with the wedge pattern. I mean, different traders mark them differently on the charts as well. I find that they tend to be more reliable on the higher chart time frames just because they contain more price data. It's worth mentioning again, you could have entered on the pullback to this resistance level here, which would have, gave you a bigger profit or just increased your chances of not getting taken out here if your stop loss was up here somewhere. I mean, the bearish spinning top pattern here, price action showing uncertainty but lower highs. Again, there were signs this could have been an area to take a short trade, sell trade based on the price action and the resistance. Anyway, so continue on down this trend. Another broadening wedge pattern, as you can see here, mark the resistance, mark the support. You can see it's quite significant of support. Level of support is hit multiple times, holding up well. So when eventually it does break, it breaks with some force downwards, which is why you could use pending orders. Basically put a sell order on either side of the support or buy order on a pending buy order on the other side of resistance, just looking to catch that price quickly in case you're not at your chart at the time it happens. Also, you might incur slippage if you're trying to use a market order. So yeah, we're going to look to trade the breakout of this support level, the broadening pattern, on a downtrend, and that is a potential for 170 pips. Okay, you may be arguing, well, why wouldn't I have taken it here or here? I mean, you could have. You may have been stopped out unless you had your stop loss above the resistance level there, which would have been 40 pips. It's not ideal, but if you look here, this resistance level has not been tested that much, which is why you probably would have waited until this opportunity, because you can see the patterns formed nicely there. Okay, that is just a confirmation that, okay, this is a good resistance level. I'm happy to take the breakout of the support line there of this particular broadening wedge pattern. I mean, the market's a bit messy here, these big candles, but if you're in there, around here somewhere, you put your stop loss up out of the way above the resistance level with a high 30 pips. I mean, there's still ample opportunity to catch plenty of pips with a really good risk to reward ratio, and you can just sit back and watch the trade play out. And then this is when the market turned into an uptrend and we looked at these patterns to get in using that particular price action analysis. Okay. As I said, you can use other indicators for confirmation. You don't have to take the pattern as it is. But it's just useful to be aware of it, keep an eye on it, even if you just use it as confirmation for your current trading strategy. It can be used on any trading instrument, any chart time frame. Just make sure you've got sensible money management. Hopefully you found this video useful. Please like and subscribe for more. Thanks for watching.